I literally can't believe how much the market is falling. I think big tech is now cheap. That includes Amazon. I think Amazon right now is an absolute steal. Same with Meta. Meta's down 4.2% on the day. Google's only down 0.5%. But in this video, I want to do a full analysis on Amazon for you in another stock that I absolutely am obsessed with right now. And I'm really considering buying this company. This is SFM. This is Sprouts Farmers Market. Look at the top right. They're a $13 billion company and they have no debt whatsoever. This is a debt-free company, and look at how much net income they're making, and look at the net income growth at the bottom. This is what I like to look for. Companies growing their bottom line. So they're making, 80 million plus of net income every quarter. And look at their cash right now. They have $265 million of cash, again, with a $13 billion market cap and no debt. So if we look at their total debt right here, they just paid off all their debt. So it's literally 8 million. So we'll just consider it nothing. $8 million is literally nothing. And this company is a buyback machine. So usually they buy back like 2 to 5% of their company. Look at this, back in 2023, they were buying back, I don't believe this, 6 to 7% of all the shares that existed back then. So if we go to 2019, there was 118 million shares. Now there's only 101 million. That's unbelievable. So if we actually go to look how much they're spending on buybacks, literally the most recent quarter, they just spent $100 million buying back their own stock. So because this company has no debt and they're making so much free cash flow and net income, they can just buy back their own stock. So this one is a very unique play. Now the valuation is pretty expensive. Like the forward PE is a 29. But again, I love these I love these healthy grocery stores that I think a lot of Americans are now going to. They only have stores in America, so Sprouts Farmers Market is an American-only play, so I don't really think they'll get too affected by tariffs. But yeah, this EPS of almost $1 a quarter, the free cash flow per share is well over $1 a quarter, so that's a really unique one. Let me know your thoughts about that one in the comments. But the main point of this video, I want to share with you how incredible Amazon is, and I might buy this one as well. Sprouts Farmers Market's on my watch list, and same with Amazon. So as we know, look at this EPS growth. You can't make this up. Or, well, the EPS is just the net income per share. Literally, if we go back to 2022, they were losing net income sometimes. They lost 3 billion, then 2 billion. But now in the most recent quarter, they have made 20 billion of net income. This is absolutely ridiculous. And it's not just the earnings per share that's growing. Look at the free cash flow per share. This company could easily afford to pay like a 50-cent dividend. They could pay 50 cents per share if they wanted to. I believe they'll do that in the future. So let's see how much cash they have on hand. So, wow, Amazon has $101 billion of cash. That's ridiculous. That's because they don't pay a dividend and they're not really doing any stock buybacks right now. So if we actually go to their stock buyback program, if you notice, they don't buy back any stock, but also they don't issue any stock. So this is the good news. They're not really diluting you, but I think one day they'll start returning money to the shareholders. But right now, if we look at their cash from investing, or cash flow from investing activities. Look at this. They just spent $37 billion on CapEx. So they're really investing in the future. As you know, they're in the AWS business. They have their Amazon Web Services. Yeah, look at the CapEx spend. It just went up like crazy. They're buying GPUs and stuff like that. But anyway, they still have $101 billion of cash. Look at their short-term investments. That's basically a record amount of short-term investments. So they must be making a lot of interest. Let's check this out. Yeah, literally in the most recent quarter, they just made $1 billion of interest. So just because of the $100 billion of cash, they made $1 billion of interest. And what's their total debt? That's good to know. So look at their debt. So they do have a lot of debt, 75 billion, but they have more cash than debt. And the trend of their debt is going down. Like they're not issuing any new debt. So that's great news for Amazon. That's why I think this one's such a great buy. What other company is growing their free cash flow per share and their EPS this much? Look at this net income growth. That's ridiculous. And it's real as well. We can see from their operating income that doesn't include the taxes, but Amazon, I think, is now at a fair valuation, $2.2 trillion. So let me know what you think about that one. There's a lot of stocks on sale right now, including Meta. Oops, I just clicked on DocuSign. These stocks are so volatile right now. Let me go find Meta right here. So I'll be super quick about this one because we also just made a video about this one recently. But if you're an honest investor, look at this valuation right here. They have a 24 forward PE. That's very fair. 24 forward PE. And what company do you know? This is big tech right here. Here's why these companies deserve these insane market caps. Look at the free cash flow per share growth. It is up to $11 a share. And the dividend only costs 50 cents a quarter. So this company has an extremely low dividend payout ratio. And if we look at the earnings per share, which again is the net income per share, You can't make this up how incredible this is. They just made a record 21 billion of net income. The operating income was also 23 billion, so this is real. Just the organic sales were up 20%. Look at this. The 48 billion of sales and 20 billion of that was net income. So look at their net margin right here. It's 43%. This is ridiculous. And the margin expanded. It expanded from 34 to 43. This is why Meta, I just bought another share of this one. I now own 4 shares of Meta. Again, I might be biased on Meta, but these are such great companies. So I'm still up 26%. Our average cost is $500, but I'm really looking to add Amazon. Let me know what you think about this one. Look at that. Actually, this is great news. When we started the video, my portfolio was way down here at the new intraday low, but we're seeing a nice little recovery, which is great news. So that's great. And we can also look at our Roth IRA. Our Roth IRA is not done great. It's down 5% on the day. So good luck out there, friends. Let me know. Today's another great day to just slowly dollar cost average, but a lot of people are out of cash right now. I still have some cash, like in the middle of my screen right here. I have 1,400 of cash. I'm very scared that the dip maybe will just keep on dipping for the next couple months here. Maybe in a month from now, we'll be lower than where we are today. Like maybe in a week, we'll jump up, but I'm just scared. So I am holding 1,400 of cash. I do think it's smart to maybe be 4 to 5% cash. Another change I made to my Moomoo account right here, and I'm so sorry. I'll happily explain myself in the comments here, but I did, like I announced in my last video, I sold out of all my Nike. So I actually sold all my shares of Nike. I had 17 of them. I sold it for a 5% loss. So I think total we lost $80 selling out of Nike, but then I decided to buy some other companies, and we did have some unfortunate timing. Like, look at this right here. We bought another share of Comfort Systems, or two more technically, the day and the day before, at 350. Now it's 328. This company's trading at 18 forward PE. It's so cheap right now. Dude, Powell Industries keeps on falling. This one's trading at 12 PE. The forward PE is cheaper, so they're expected to grow their EPS, and they have no debt. I think like literally 25% of their market cap is just cash right now. I bought another share of Disney. And again, another unfortunate timing right here. We bought it at 113, and then the next 3 days it just tanks to 106. Oh, this is just the stock market for you. And we bought another share of EOG Resources. If you don't know, this is an oil and gas play. I think it's smart to have a little bit of exposure to the oil and gas industry, because if inflation comes back, oil actually goes up and does good. And look at this one's dividend right here. You get a 3% dividend, and look at the payout ratio. It's only a 32% payout ratio. So 3% yield, low payout ratio. Look at the growth of the dividend as well. And for the full year 2024, you now get $3.64. You know, in 2020, it was $1.40. So very shareholder friendly here at EOG Resources. The PE is a 10 right now. So yeah, I wouldn't call you crazy to have a little bit of exposure to the oil and gas industry, but one company that has held up fantastic is actually McDonald's. So as we know, most stocks, year to date are down like crazy, or on like the week, month, most stocks are down, but not McDonald's. McDonald's has done incredible. They actually welcome recessions. In 2008, when there was a big recession, McDonald's opened so many new stores. Whenever there's a recession, consumers, go spend more at McDonald's instead of going out to the more expensive places. But yeah, we also have a pending dividend of $23. So that's a great little chunk of change that I get from McDonald's. So yeah, that is a company that has held up fantastically. Another one that I do own as well that has held up pretty good is actually HSY. This is Hershey's. They're kind of in the same, not really the same industry as McDonald's, because most of McDonald's revenue comes from real estate and royalties. But Hershey's is another brand that I really like. They own Reese's, Kit Kat, Jolly Rancher, Skinny Pop, a lot of popular brands like that. But look at the dividend yield. They have a 3% yield here. So I do like Hershey's for that. And this company has been seeing some hurt input cost from the inflation from cocoa, like the actual commodity of cocoa, like chocolate has gone up so much. So, good news though, they did just make, basically 800 million of net income, which is a great sign. They can do dividend share buybacks with that. Well, they do it. They have a 3% yield, so that's another shareholder friendly company. They're like a dividend growth stock. But yeah, I can't believe Constellation Energy, they're down 8% on the day. This is where it starts to get scary. Like, look at this. We're barely break even. We're up 1% on Constellation Energy now. Like, the valuation is so cheap on them. Like, how low can this valuation go? I don't get it. The trailing 12 months PE is a 17. I never thought it would get this cheap. The forward PE is a 22. So if you listen to my recommendation of saying buy CEG, I apologize if you're down on your position, but I think this one is still a good buy even right now. 0.74% dividend yield. Just to show you how great this company is one last time, look at the earnings per share every quarter. They're making well over $2, but let's just look at the net income right here. They usually make 800 million of net income every quarter. So remember that they make 800 million of net income a quarter, and the dividend only cost 111 million. So very safe and sustainable dividend payout ratio. And look at the stock buybacks. They are a very shareholder friendly company. They usually spend a lot on buybacks, but they haven't spent any money on buybacks in the two most recent quarters because the stock has done so good. But I can almost guarantee at this point Constellation Energy and the team are going to be very happy buying shares back at $210. So yeah, I might be looking to add more to Constellation Energy. They just can't go any lower. Today has to be the bottom on them. This has to be the bottom, or things are going to get really scary. I sound crazy probably. So hey, if you want to hit the follow button, I just like being transparent, sharing with you how bad my portfolio is done. Like, look at this. Because of that, look at us the past week. We're down 5% the past week, the past month. We're now down over 10% the past month. So I hope you can drop a like on the video. Hope you appreciate the transparency. I see so many other YouTubers sharing their stock portfolios. I like watching them to see what they do, but they're not transparent and don't really show you. Like, here's my total percent change on every stock now. Look at that. We're now down on Carlisle 0.38%. We gave up, so we used to be up 70% on Constellation Energy. We were up 70%. Then I bought more of the shares, and we're only up 1% on them now. We're still up 25% on Meta. But yeah, good luck out there, friends. Please leave a comment. If you leave a comment, I'll make sure to respond to it. But yeah, good luck out there. Markets are going crazy.